Hello everyone, welcome back to Stock Market Meridian. Today is 25th August 2026 and you're watching today's post-market report. Let's begin with today's market action. The Indian market started the day on a flat note and remained largely sideways until around 1:30 p.m. But then, the market suddenly changed direction. From around 1:30 p.m. onwards, we saw strong bullish momentum, with the indices moving sharply higher. One of the key triggers was the fall in crude oil prices, along with several important market and corporate developments that we'll cover in this video. In sectoral performance, healthcare and consumer durables emerged as today's top gainers. Meanwhile, private banks and metal stocks remained under pressure and were among the top losers. Now, before we move into the corporate updates, there's one important global development investors need to understand. The US bond market is once again flashing a warning signal. The combination of rising US government borrowing, increasing debt servicing costs, and weaker foreign demand for treasuries has pushed the 30-year Treasury yield back to around 5.24%. And the numbers behind this are significant. US national debt has crossed $40 trillion, while annual federal interest payments are approaching $1.2 trillion. At the same time, technology companies are raising huge amounts of corporate debt to fund AI data centers, creating additional competition for institutional capital. To stabilize the long-term bond market, Treasury Secretary Scott Bessent announced that long-dated Treasury buybacks would be doubled to at least $4 billion per operation from September 9. But the 30-year yield quickly moved back toward 5.24%, showing that investors remain cautious. Foreign private purchases of US Treasuries have also fallen by more than 40% year-on-year, increasing pressure on Washington to offer higher yields. And this matters for global markets. If US yields remain elevated, money can continue flowing toward dollar assets, while high borrowing costs can put pressure on equity valuations globally. At the same time, geopolitical tensions in West Asia and North America are adding further uncertainty to energy and trade routes. For India, the key areas to watch are bond yields, the rupee, FPI flows, crude oil prices and commodity inflation. So, in simple terms, higher global yields and geopolitical uncertainty could create volatility for Indian markets, while falling crude prices could provide some relief. Now let's move to the major corporate updates and stocks in focus today. India's defense manufacturing story just received another major boost. Defense Minister Rajnath Singh has approved the transfer of technology for all DRDO-developed conventional missile systems to domestic Indian industries. What does this mean? Missile systems that were earlier developed by DRDO can now move more efficiently from the development stage into large-scale industrial production. This could open opportunities not only for major defense companies and PSUs, but also for MSMEs involved in electronics, sensors, propulsion systems, sub-assemblies, and precision components. The move also supports India's long-term goal of reducing dependence on foreign defense imports and expanding its defense exports. This comes alongside India's broader indigenization push, including a recent positive indigenization list covering 405 defense items worth more than 3,000 crore rupees. So the takeaway is clear. More domestic missile production could mean a larger and deeper opportunity for India's defense manufacturing ecosystem. Next, the government's disinvestment strategy is putting another metal stock in focus. Hindustan Zinc shares slipped nearly 3% as market speculation increased that the government could sell around 1.5% of its stake through an offer for sale or OFS. Such a sale could potentially raise around 3,500 to 4,000 crore rupees depending on the final pricing and demand. The Government of India currently holds around 27.92% in Hindustan Zinc, while Vedanta remains the controlling shareholder with around 60.71%. The speculation gained momentum after the government launched an OFS in Hindustan Copper, offering a 3% base issue with a 3% green shoe option. Meanwhile, the government says it remains firmly on track toward its 80,000 crore rupees FY27 disinvestment target, having already raised around 52,000 crore rupees. So investors should keep an eye on upcoming OFS announcements because further government stake sales could create short-term pressure on PSU stocks. Now, here's a banking stock that caught investors' attention today. Federal Bank shares fell around 4% following reports that the bank is in advanced discussions to acquire a controlling stake in Jana Small Finance Bank. According to reports, Jana SFB's promoter could sell its entire 16.9% stake to Federal Bank. Federal Bank could then launch a mandatory open offer to acquire additional shares and potentially gain full control. The strategic logic is interesting. Jana SFB would give Federal Bank greater exposure to microbanking, MSMEs, affordable housing and semi-urban markets, along with a nationwide branch network. However, investors are also looking at the potential capital requirement, integration costs, and portfolio consolidation risks. Federal Bank's recent financial performance provides some comfort. Net profit rose 36.6% year-on-year to Rs 1,177 crores, while NII increased 26.1% to Rs 2,946 crores. Asset quality also remained healthy, with GNPA at 1.52% and net NPA at 0.18%. So while the acquisition could expand Federal Bank's reach, investors are currently waiting for more clarity on the deal structure and financial impact. Next, Suzlon Energy is also back in focus, and this time it's because of both new orders and a massive investment plan. Suzlon has secured a fresh 250 megawatt wind power project from Torrent Green Energy. This is the sixth order from the Torrent Group, taking their cumulative partnership to more than 1.3 gigawatt. Suzlon will supply and install 76 S144 wind turbines for the new project. But that's not the only major development. Suzlon Group plans to invest around 10,000 crore rupees to develop 1,325 megawatts of new wind capacity in Andhra Pradesh. The project is planned in the Rayadurg area of Anantapur district and is expected to generate around 4,000 direct and indirect jobs. Suzlon already has more than 1,700 megawatts of installed wind capacity in Andhra Pradesh and is targeting an additional 5 gigawatts of renewable capacity in the state by 2030. So Suzlon's story is becoming increasingly interesting, with a combination of order book growth and long-term renewable energy expansion. Now, here's a stock that delivered a powerful move. Ratnamani Metals rallied as much as 21% over 2 trading sessions after announcing major export contracts worth approximately 2,700 crore rupees, or around $286 million. The contracts were awarded to its subsidiary Ratnamani Fino Spooling Solutions and involved the manufacturing and supply of specialized industrial spools and piping hangers. The biggest positive? The contracts are expected to be executed over 2 to 3 years, giving the company strong multi-year revenue visibility. The stock touched an intraday high of around 2,843.90 rupees, while its market capitalization reached approximately 19,331 crore rupees. With a large export order book and multi-year execution period, the announcement provides a strong visibility boost for the company. The future of electric vehicles is becoming increasingly software-driven, and Tata Motors is taking another step in that direction. Tata Communications and Tata Motors passenger vehicles have partnered to accelerate the development of software-defined vehicles in India. The first major application will feature native 5G connectivity, starting with Tata's upcoming Sierra.ev. This technology can support connected infotainment, real-time navigation, remote diagnostics, predictive maintenance, and over-the-air software updates. That means future Tata EVs could receive updates to their software, powertrain, and battery management systems without requiring a physical visit to a dealership. The partnership also creates a foundation for advanced connected car technologies such as ADAS and V2X safety systems. In short, Tata Motors is moving beyond simply building electric cars and increasingly toward building software-connected vehicles. Now, here's a very different kind of investment, one focused on the future of healthcare. Natco Pharma is investing $14 million, or more than 116 crore rupees, in US-based biotech company eGenesis. The investment will come through 2 Natco overseas subsidiaries and will be made through convertible promissory notes carrying 8% annual interest. Natco had already invested $8 million in eGenesis in 2024, taking its total commitment to around $22 million. Why is this company important? eGenesis is working on genome-engineered organs, including organs derived from pigs, with the goal of addressing the global shortage of human donor organs. The company has already been involved in experimental pig-to-human organ transplantation programs, including kidney transplantation. For Natco, this investment represents a move beyond traditional generics and toward next-generation biotechnology and cell and gene therapy platforms. Another renewable energy company making headlines today is Acme Solar. The company has secured 300 megawatts of contracted capacity in SECI's assured peak power tender. The project was awarded at a tariff of 6 rupees per kilowatt hour. Acme will supply around 1,200 megawatt hours of guaranteed peak power during designated 4-hour daily peak demand periods. And here's the important part. After the PPA is signed, the project could take Acme Solar's PPA-signed battery energy storage pipeline to around 15 gigawatt-hour. Because battery-backed renewable power can deliver electricity during high-demand periods, it can potentially provide better revenue visibility than conventional solar generation. So Acme's latest win strengthens its position in the growing firm and dispatchable renewable energy segment. The real estate space also has an important update. India Bulls Limited has signed an understanding with a private landlord for the development management of a premium residential project on approximately 10.84 acres along Dwarka Expressway in Gurugram. The project is expected to have around 21 lakh square feet of saleable area with an estimated gross development value of approximately 3,700 crore rupees. The development management model is important because it allows the company to generate project-linked and fee-based revenues without taking on the heavy upfront cost of acquiring the land. Phase 1 and Phase 3 have already received RERA registration, and the project is expected to launch around mid-October 2026. With this addition, the company's total gross development value across projects rises to approximately 27,308 crore rupees. So the key takeaway is a potentially significant addition to the company's development pipeline without a traditional land acquisition model. And finally, let's look at a consumer and travel theme that is entering its seasonal peak. Thomas Cook and SOTC are expanding their winter travel offerings as Indian travelers increasingly look for experience-driven holidays. Their packages cover destinations such as Finland, Norway, Sweden, and Iceland, featuring aurora viewing, husky sledding, snowmobiles, and glass igloo stays. They are also promoting Christmas markets, winter sports, panoramic rail journeys, and Scandinavian experiences. Beyond Europe, the offerings include winter experiences in Canada and the US, along with Australia and New Zealand for travelers looking for warmer escapes. The company is targeting couples, families, and younger travelers who are increasingly choosing unique, immersive experiences over traditional vacations. With Thomas Cook India Group's presence across multiple countries, the company can also cross-sell services such as forex, visas, and holiday packages. So the bigger trend here is simple. Indian travel demand is moving from basic sightseeing toward premium, experience-led vacations. Market wrap-up. And that brings us to the end of today's post-market report. If you found this analysis useful, make sure to like this video, share it with your fellow investors, and subscribe to Stock Market Meridian. I'll be back tomorrow morning with another detailed pre-market report covering global markets, important developments, commodities, and the key factors that could influence the Indian market before the opening bell. Until then, signing off. Jai Hind.